Did you know that an asset you likely already own can hold the key to greater financial security for your future or the future of a loved one? Now, we're not talking about stocks or real estate. We're talking about your life insurance policy. It's a safety net for tomorrow, to be sure, but what if it could also provide crucial support for today? It's a surprising fact that 9 out of 10 insurance policies are surrendered. Essentially, people are walking away from all that potential value. For those navigating dementia care, planning for their own aging journey, whatever, this could be a missed opportunity. Could selling your policy be the answer to funding essential long term care, making your home a haven for aging in place, or simply enhancing your independence? Join us as we uncover the surprising asset that might be right under your nose. Welcome to Fading Memories, your source for all things dementia caregiving. I'm your host, Jen Fink, and I have had 3 generations of loved ones with dementia, and I'm here to share the knowledge I've gained with you. Welcome to the Fading Memories podcast. I'm Jen Fink, your host. Thanks for giving us some of your time this week. This week, we are talking to Rob Haynie. He is with Life Settlements, and he has already taught me how you can use your life insurance policy as an asset and not just something that takes all your money until you end up passing. So thanks for joining me, Rob.
Thanks, Jen. Thanks for having me.
Thank you. So what you were telling me before when we were planning this episode, that at some point your life insurance is it's an asset that you should probably take advantage of. Can you give us a little bit of background on the different types of life insurance policies? Because I can't even remember what flavor mine is at this point.
Well, I can do all of that. So thanks again for having me. My name's Rob Haynie. I'm with a company called Life Insurance Settlements, Inc. We are located in South Florida. And I have been in the life settlement business for 31 years. So it is really all I know, and my wife will back you up on that. So as it pertains to life insurance, there's many kinds of life insurance policies that people can own. They can own a group policy if they go to work when they're younger or older, it doesn't matter. That's owned by a group. And then when they leave, they can take that with them. There's term policies, which you see on TV all the time, that are really relatively inexpensive. They are not generally big, but they can be big. But the ones they sell on TV are not. So those are a policy that you pay for the term that you own it for. So there's a cost, you know exactly what the cost is being, you know when it ends, and then you'll reevaluate if you want to continue or not. Of course, as you've age forward, it's going to be more expensive. There's universal life policies, and there's whole life policies. There's VUL, IUL, GUL, which are variations of universal life policies. Guess what? Every one of those you can sell. Your life insurance is an asset that you own. Nobody wants you to know that, especially the life insurance companies. But in 1911, there was a Supreme Court decision that came down that life insurance held all the same properties as real property. So you own it. You can change the ownership anytime you want. You can sell it to whoever you'd like at any time you want. And the same goes with life insurance. So what we do is we help people who are older, typically, senior citizens, if you will. I'm 60, so I count. And we help them look at a life insurance policy from a different angle. So many people buy life insurance when they're younger. They buy it for a myriad of reasons. Most popular would be is protection in case one of the spouse were to pass away. The other person has enough money to kind of get through that period of time where there's income needs to be replaced, et cetera. They buy it for mortgage protection. They buy it in case something happens to them that they can afford to put the kids through college. So there's many reasons they buy it. But what happens is that when you're 35 and you buy it for all those reasons we mentioned and then some, and now you're 70, those reasons are gone. Your house is paid for. You may have retired. Your kids have graduated college. They're on their own. And the premiums are starting to get more expensive. and you need to do something. You need additional income for your retirement. You might need to pad that retirement account to move into assisted living facility. You might need to use that money to update your home to make it more conducive to the way you're going to be living now and into the future, which is called aging in place, which I can tell you is exciting prospect for people because people are starting to realize that, wait a minute, I work all this time, my whole life to pay for this asset that I own my home. And now I can use this other asset and sell it and use that to kind of make it what I want to live in. So it might be moving a bedroom from upstairs to downstairs. It might be putting ramps in the front and the back of the house. It might be widening some hallways. It might be putting one of those lifts up in the stairways. Certainly making the bathroom more more accessible for someone who's older than from slipping and falling. So, or just be honest. You can take the money you sell your life insurance policy for, and you could buy a car. You can go on a vacation. It's your money. You can literally do with it whatever you please. So, um, if you want to know how it works, it's real simple. And I'll just make this. Now you can ask me some questions. I know you're ready to. Um, People come to us. They fill out an application that's approved by the state they live in and by their Department of Insurance. It's a state approved application. Gives me the right to do two things. I represent the seller. So I am their real estate example. I'm their real estate broker. So I go out and I represent them and I collect medical records. Most the medical records more related to their current overall health. And I get insurance information. And then I package that all together and I send it to all the licensed provider companies there are in the country. And I pit them in the uncredited position of being in a bidding war. So they have to bid the policy they think what it's worth, and they have to bid against other people who also think it's worth maybe something different, maybe something more, hopefully. And we bid them up until no one could beat that highest offer. So it's all based upon two things. How much are the premiums going to be going forward? And what's the perceived life expectancy by that particular buyer? And that's the math that goes into that is how many years do they have to put aside premium payments based upon how long they think that individual is going to live. And then the client will negotiate a price and they'll get a percentage of that death benefit while they're alive. So the easiest scale I can tell you is the shorter you have to live, the more money you're going to get. And we don't recommend anybody who's got what we call a viatical settlement or someone who's terminally ill sell a policy because I think it's more valuable to your family, your loved ones after you pass away because you'll get 100% of it. But what we're finding out is that's not always the case. They don't have the money to pay the premiums. You're going to lose it. So with that, we said, let's go out and figure out what is the best move for the client, and that is to give them the resources they need to make the decision. You do not have to sell your policy. We may exceed your expectations, and that's been done in the past. We've had clients that have said, I didn't think this was going to happen. I thought you guys were nuts or whatever they said, but here I got the money, and I'm sitting here going, that's a lot of money for my insurance policy, and it made it very real to that person. So he decided to keep it. Now, I will tell you 2 years later, he sold it. But at the time, I'm 60 years old. I've never, ever had to come to grips with my own mortality by selling my life insurance policy based upon life expectancy. It's never happened for me yet. So I don't know. I've done 40 some odd thousand of these over the course of 3 decades. But the reality is one doesn't know. So we just want to be there to help you understand what it's worth and then give you the ability to make a good informed decision on what to do next.
It makes sense. So you can do this with any
Any,
version of the policy? No. Okay.
any,
Any. Okay. I'm super. I should have looked up what ours is. This pay.
No, I mean, you think about it. So the one thing, life insurance companies do not, so let me give you some stats. This will make it even crazier for you. So, 90%, 88, 90, 91, whatever the number is, 90% of all life insurance that's ever been issued in the United States to anybody never goes to claim. It's either surrendered or it's lapsed.
90 something percent of like life insurance?
All life insurance.
Oh my Lord. That doesn't seem very smart.
Well, because you use it and then when you don't need it, it's kind of like car insurance, except, you don't want to take that with you. You don't want to take your health insurance. You don't want to take all these things that you buy for a specific reason. Life insurance, it just has the ability to be considered real property. So you can use life insurance as collateral. You can assign it to somebody. You can gift it to a 501(c)(3), to your old college, all of that. You can do that. And then when you pass away, the college gets the full death benefit, tax free, because they're a 501(c)(3), and you get noted for the donation. Some people sell their policies on behalf of the institution or the 501(c)(3) that they want to do that with while they're alive. So the unique thing there is you get the tax incentive for selling, because that's, you're going to get a tax write off for that, and they get the settlement amount now in liquid cash. So you're trying to create liquidity out of something that's not liquid, which is the life insurance policy. So every year, our industry has sold, in the last five, we'll call it, about $4 to $5 billion of death benefit for people collectively, our whole industry, in the United States of America, in a life settlement. And that sounds like a lot, right? 5 billion, 4 billion. Every year, people over the age of 65 in the United States lapse or surrender their life insurance policy to the tune of about 112 billion every year. So that's five on top of that. So that means that I've been doing this for 31 years, and I am the worst marketer in the world. That I've not grown my fan base, if you will, any bigger. That's why I'm on your podcast, because I know you're great at this and you're going to help me talk to other folks, because people just don't know about it. Life insurance agents actually don't care about it. Sometimes they're told they're not allowed to talk about it, which is, in my mind, criminal. But that's just the facts. Life insurance companies just don't care. They just want money. And the best way to describe it, you ever called your life insurance company recently?
No, I have
Yes.
not had a need.
So when you do, I'll call them for a question. You're going to go to what they have two aisles. They have the I need your money, or you need my help. So the you need my help lane is where that's customer service. So if you need something, they want you to fax the request for it, a fax machine to them. They're going to fax it back to you.
That's a problem.
When they feel like, well, that's true. They're going to mail you something. They're not going to scan it. They're not going to email it. They're not going to do any of that. And it's going to take time, because that's the slow walk approach to life insurance company. Customer service is, I got your money. What are you going to do about it? But if for some reason, Jen, they needed your money, and somehow we found you in a coal mine in South Africa, and they needed you to pay them a premium that was due, they would fly a drone down to that mine shaft and have you swipe your credit card. That's how the technology will change when they want your money.
It's
And
kind of like when
call your life insurance company. They're not quick, and it's by design. And
yep,
and
capitalism.
the women and men that are working there are doing their best job they can, but they're limited with, the resources of fax machines. And I talked to a woman, getting off the subject, but it's kind of funny because we're up against it. During COVID, they would have the faxes coming in, and no one's working in the office. Nobody there. So every 2 weeks, this woman would go to the office and she'd collect the faxes and she'd bring them home. And the other week in between that, the other person did it. So they go get the faxes from the insurance company. They bring them home. You know what she did?
Set them on her desk.
He scanned them,
Oh, good God.
and then she emailed them to everybody.
Oh, God.
Couldn't have done that up front. Had to do it. So, and I said, out of curiosity, how many of these faxes you're getting a week? She says, oh, like sometimes 5,000, sometimes 15,000.
Ugh. I don't want to scan that much crap.
Well, that's what they did. So because remember, they're only scanning it. They're scanning it for the week, or in her case, 2 weeks. But that's the reason for the delay. So our goal is to help people. We deal with them for you. We've gotten good at it. It's almost like that's probably like the most specialized thing we do is talk to doctors' offices and insurance companies, because the people you're talking to want to help, right? It's just, what's their restrictions? Are they allowed? what is it you're asking? Is it difficult? You have to go up the food chain, if you will, and get the approval to get that information. They don't like us, but too bad. We're regulated by the same people they are. And we're all abiding by the same rules that were the state mandates that we do. And we help people. We really take people. They can't honestly. It sounds too good to be true because they're like, wait a minute, I'm going to give you my life insurance policy that I'm about to throw in the trash, and you're going to give me money. And I go, we hope so. And when they get that money, like I said, they can do with it whatever they want.
Well, for my audience, we would be maybe looking at memory care.
Yep.
And my mom did not have a life insurance policy. I'm wondering if one lapsed. Their house was paid for, so it's not like she needed it. She outlived my dad. So, we used the asset of her house. We rented it out. That and her Social Security covered pretty much 95% of her monthly expenses. And then my parents' financial planner put money in the trust bank account to cover everything else, which was minor, co-pays and personal products and that kind of stuff. And I always kind of wondered why she didn't have one. Like I said, she didn't need it. It's like she passed
I
away.
mean, she might have. Um,
I'm wondering if they sold it.
uh, how long ago was this?
Well, my mom passed away 5 years ago. My dad passed away 8, so it would have been way prior to that. So at least a decade.
We could have been here, but it would have been different. I mean, our industry now helps people with life expectancies 20, 25 years. They're not going to get a lot of money for it, but it's better than, again, nothing. Memory care comes to mind because down here, and obviously I know that's the focus of your podcast. It's expensive. I don't know what's going on in California. I can only imagine, but Florida is crazy. I mean, the amount of money they want for these places, it's insane, and people can't afford it. So we're like, people say you always want to know how much money you have before you go in, right? They want to make sure once you're in, you're going to be able to stay there. You're going to continue to make the monthly payments. And life insurance has done that for folks. That's been the difference between I can't afford to go in and I can afford to go in. So we work with people that have policies, $100,000, $50,000 in some cases, up to who knows, 10, $20 million. And they always are looking for ways to get how can I afford to go into these units? And I mentioned earlier the difference between living in your own house and living in these facilities. You could speak to this far greater than I can, but being in the facility around other people helps people's minds.
Oh, yeah. My mom had friends,
Yeah.
people who understood her. She was with essentially like-minded people. And you were telling a little funny story a minute ago. So my mom had a typical repetitive story, and one day it was triggered by a stuffed dog. Her repetitive story was about dogs. And the resident that she was talking to, her friend, looked at her and said, "You've told me that story 803 times," which cracked me up because I thought 803 was a rather specific number. And I thought it was also humorous that this woman who had cognitive impairment could remember that my mom had told her that story a lot. And so I was like, eek, is this like elder abuse? You've told this poor woman this story 803 times potentially. And then about 6 weeks later, the same woman was actually, when my mom was triggered to start on the story again, this woman started parroting the story. And I was like, this is really bad. It's really me. I was like shocked. And it made visiting easier because I didn't have to hold up all of the conversation. I could listen to them and give my inputs, do my little bit of participation, but I wasn't, listening to the same story over and over again and trying to, interact that way. So it was really, really beneficial for my mom, but it was expensive. She was there for 3 years and 2 weeks, and it was about 240 some odd $1,000, $250,000. It was like $250,000. It was a lot of money.
Yeah.
Thankfully, they bought their house in 1970, so it was paid for. And then we sold it during the pandemic for a small profit. We sold it for $745,000. It was not even worth it. I mean, like you were talking about renovating bathrooms. So my house was built in 88. My office is downstairs. The stairway is narrow, but I've seen the little lift thingies that you stand on. I got knees that are like rusty hinges, but I also do strength training to keep everything functioning. But even going up and down the stairs, my knees are like, they sound like, snap, crackle, and pop. Oh, I don't know how long the stairs are going to be a good idea, but every time I see that little ad, I'm like, I'm going to keep that in the back of my head. But all of the houses where I live are custom built, and I don't know what the designer was on when they designed this house, but one, the kitchen is a triangle. If you look at the blueprints, it's a triangle. The bathroom is literally, the main bathroom is literally shaped like a dog leg. It's just weird. So we'd have to use all my life insurance policy. I think my life insurance policy is 600 grand because we got it when we had a really expensive house. Now this one's not paid for, so selling it's probably not the right idea because if something happened to me, it would benefit the hubby if he could pay off everything, the house and his credit cards and that kind of thing. So obviously this is not an ideal situation for me. Plus I'm not that old. I'm 2 years younger than you. So, and my paternal grandmother lived to 103. So my life expectancy is anywhere. My maternal grandmother lived to 91 with vascular dementia. Neither of my parents made it to 78. So it's kind of a crapshoot on how to figure out how long I'm going to be around.
104.
My goal was 103, like my Nana. Her mind was fine pretty much till the end. She was mostly blind from glaucoma, and then at about 101, 101 and a half, she got really hard of hearing. And between not being able to see well and not being able to hear well, that's bad for your brain.
Sure.
And I think she was having like little strokes or something. She ended up during COVID in the hospital, so I'm not entirely sure why. I was just grateful that the bed and board and care home allowed visitors because she died April of 21. So we were during the pandemic. I lost all kinds of people during the pandemic, none due to COVID, but everything else. So, that's my goal. And I work at it every day, strength training, eating right, all the things you're supposed to do to keep your brain going well, because there's a lot of stuff I need to still do.
Well, true. That's the unique thing. And this, again, one of the things, the reoccurring theme, regardless of whether you have a lot of problems or you don't, stress is you want to eliminate stress. And money is like the number one reason
Oh, yes.
your health, or in some cases over your health, it causes stress. And when we can tell somebody, look, when you can, so another statistic, which is interesting about our business. So I'm on the board of directors of LISA, which is the Life Insurance Settlement Association. I've been on the board 21 of the 31 years it's been in existence. We created a data collection survey that we're in the midst of our fourth right now, where we'd ask the providers, all the members. It represents about 99% of all the activity in the secondary market is inside this organization. So we say to them, how many policies did you buy last year? What was the death benefit total, aggregate total? What was the surrender value total? And what was the settlement value total? And we dump them into through a group that collects the information. So nobody sees the information except this one place that is blocked off from all of us. So everybody's secrets are safe. And it spits out the numbers. And every year it says, if you sell your policy through the settlement, you get somewhere between 5.2 times more up to 7.8 times more. That's on average. So if you have $1 million or $10 million life insurance policy and you're going to surrender for $100,000, we're going to get you 780,000.
Yeah, I wouldn't surrender a $10 million policy for 100 grand. That's terrible.
Let me tell you why you would. Ready? You probably, to get to 100 grand and $10 million, have been using the $100,000, the cash value to pay the premiums because they're expensive. So you're not really coming out of pocket anymore. You're taking the money you've overpaid. You really overpaid for life insurance because they put it into this account. Because what else is it? That's what term is easy to pay the cost of insurance. Universal life is to pay the cost of insurance. We're going to pretend you're creating cash value. It's just called a bank account. So you use that, you're paying like 4%, 3%, whatever it's doing. And now you're just taking that money and using it. So when you get to 100 grand, you don't have any money. You're like, well, I'm gonna surrender this for 100 grand. And you go, well, rather than surrender for 100 grand, would you rather have $780,000? And the answer is I'd rather have 780. And they sell it. Or 520, even if it's the low end, 5.2 to 7. Now we sold it where I'm sure it's 25 times the money. We sold it where it's 1 time more. But that's the average that it comes out to be. So it's worth to do what we call, let's get a free non-binding appraisal. Let's call Rob up. Let's call Joe up. Let's call Janet up, whoever you're going to call in the settlement world and say, how much is my policy worth? And we tell you. And we don't make $1 unless you do the settlement. And then we get paid for doing successful settlement. And we actually tell you what we're going to make, unlike insurance companies that don't tell you what they're making. They tell you a life insurance policy. So it's easy. I mean, that's the thing we try and make it to tell people. It's not difficult. We don't want it to be difficult. Sometimes we will ask you to help us call your doctor, who's told us 3 times in 3 weeks that they're going to send the medical information. They never do. Or call the insurance company on our behalf because they won't want to talk to us because we're not you. But other than that, that's really the amount of effort you're going to put into it. And in about anywhere from 8 to 12 weeks later, we're going to have the answer.
That's a long time, 8 to 12 weeks.
Oh, why do you think that is a long time? What do you
Oh,
think?
because our
The
system.
insurance company's not helping us.
No, the doctors.
Isn't helping us. We have to analyze the medical records. They have to be given life expectancies, and then we have to bid. So we make it worth your while. Which, typically I think about 8 to 12 weeks is about the average.
I mean, it's, as my mom used to say, better than a hit in the head, but geez, 8 to 12 weeks is still a long time.
My grandmom said sharp stick in the eye.
Yeah, I think my mom used that one too. She was always saying better late than never as well. I use that one frequently when I am slow on responding to somebody or something.
Well, we also don't want to lie to somebody and say, oh, it's going to be 3 weeks, because it's not. And we don't want people, I tell people all the time, I go, when I tell somebody it's going to be 8 to 12 weeks, nobody gets upset when it's 8 weeks. Nobody. They get upset if I say 8 weeks and it's 12, they get upset. So I tell them it's going to be, and I tell them the whole time we're going through it, what we're waiting on. And when we get into bidding, that's going to be dependent upon the client. The client may not say, well, that's not enough money. We have to go back and try and get more. And if we can't, we'll just get to the end. And sometimes the deal doesn't go through. But I'll be honest with you, those are few and far between. Most go through because the client wants more money and we're going to get them more money.
Let's do a what is it? Hypothetical scenario.
Oh, go.
Well, we'll just use me. So let's say I turn 60 and well, I should back up one thing. So you keep talking about your policy, like it's not expires, but like the fee goes up, because I'm pretty sure we've been paying
Your premium, well, it depends. So first of all, let me just start off with you. I know you, Jen, after one phone conversation and one video conversation, you're too young and healthy to sell your life insurance policy. Okay, I'm just being honest with you. You wouldn't get it. But we'll pretend you're now 70 instead of 60. Depending on what type of policy you have, your premiums typically increase over time. Terms don't, but they expire.
Yeah, I don't think ours has.
Well, that's good. You might have a term.
Okay, I think it is. We had like a life insurance with an annuity, and then, back in 07, 08, we had 2 self-employed people and a kid about to go off to college, and it was like, yeah, we're selling these, or whatever we did with them. I cashed them out. And then we got the policies we have now right before my 45th birthday. Like literally, I think we did it in November. My birthday's mid-November. That's how close I was to being in the higher range. I was like, get this done.
But 20-year term policies, and you've got about 5, 6, or 5 years left.
That sounds about right.
And after that, they're going to say you're going to have the 2 choices. You're going to be able to convert it to a permanent product, which means you're going to be able to convert. It's going to be more expensive than you're paying now, but it's going to lock in the premium and it's going to stay that way. Okay. Most of the time. And, or you can renew the term, which means you're going to buy another 10 years or 20, and you're going to pay a locked in price that's going to be much higher than you were paying prior to that. That's when people quit the policy, right? They just say, that's it, not paying for it. Because you start doing the numbers. If you're paying out what you're paying now, just make it up. You're paying $500 a month, $500 a year. Just make it very simple.
I wish.
Right? Yeah, now you're going to pay $2,500 a year.
And we pay more than that too, not quite more.
Yeah.
I think the two policies were 245 because it just hit the premium just hit the bank account a few days ago. So it's
Yeah,
not horrible, but I think
no, because they're not horrible. They're the most popular policy there is. Most
just
people
didn't know that there was the 20-year time limit.
Oh yeah, there's a time limit. Term is literally, think of the definition of the word term. It's for, president is serving his first term, his second term, the third term, whatever it is. They're always a prescribed length of time. When you buy a universal life product, that's a permanent product. That goes to age 100 or age 120 now.
Okay. Now I'm gonna have to figure out what we have because now I'm super curious. It's not something I paid attention to. I just knew we had it. So, trying to figure out how many years we have left. So we must have, yeah, 6 years, 5.5 ish. Okay, that's interesting to know. So the hypothetical scenario I was going to suggest, we'll just bump my age up.
Go.
Or let's say 65. I'm 65, healthy, but I have a family history of dementia. So my mom had Alzheimer's, her mom had vascular dementia, my maternal grandmother had some form of dementia. But I'm healthy. How do you think they evaluate that? Would that be on the lower end?
I'm still going to guess, yeah, definitely lower end because they don't know. And they're going to evaluate your cost of insurance. You've got a conversion, you got a term policy. So they're going to look at, okay, what is they're going to run a conversion illustration and they're going to say, what's that cost? They see that cost. They say, what your life expectancy, and they're going to calculate that and say, you've got a 20-year life expectancy, just make it up. And they're going to give you a very low offer, but your offer is zero if you don't take it. You know what I mean? Right. So, and you might decide, I'm going to hold on to this policy. Life insurance is a good thing. Life insurance, by the way, is a great thing. I mean, it's it's a wonderful thing. It's done a lot of good for a lot of people. My problem, life insurance is just too expensive, given the fact that I know 90% of it lapses. This should be more affordable. But they're, mutual companies and they're running they're trying to increase the stock and make the stock price more attractive, and it's just nonsense. The customers have gotten the short end of the stick when it comes to that.
Well, 90% of people don't use it. That's a pretty good profit.
That is exactly correct. So I'll give you, to your point, you ready? 2008, 2009, you mentioned it yourself twice in this call. So we remember that very clearly. Do you remember when the term too big to fail was thrown about and they created the toxic asset relief program, which was the money they gave out to all the banks, the institutions to stabilize the economy because they had bought all the subprime mortgages and that were going to go in the toilet. We lost Shearson Lehman Brothers and Bear Stearns in a matter of days. They didn't want to see any more carnage, right? So the big financial institutions got money that they could get interest free, stabilize and it was one of the greatest things that ever happened, right? For them and for our country and for the world. How many life insurance companies got money?
I'm guessing zero.
Well, AIG got a little, but only the part that wasn't the insurance, but they were the only the close hybrid of insurance. None. And do you know why they didn't get any money? They didn't read it. Because during a financial crisis, what was about to happen to them? Well, number one, everyone needs to pay them for the premiums. They already have the annuity money. So they knew more people were going to lapse and surrender their policies than ever before because they had no money. So they were going to uptick, and for the next 5 or 6 years, the most profitable years for the insurance industry. They didn't sell as much insurance, but they had a lot of people lapse and surrender their policies. So they do not need your money. They are real estate companies. If you really want to know the truth, you fly into any city in the United States of America, and if you could get a map, the Google map on their phone to show you who owned what building, the biggest and tallest and most impressive buildings in every city is owned by one of an insurance company, because that's what they do with their money. They buy real estate.
Like the Transamerica building in San Francisco.
Yep.
That one's easy to come to mind because it's kind of a hey, right.
I mean, that's just, and that's one of, that's not the, that's the building they own with their names on it, right? But there's lots of buildings they own where their name isn't on it.
Interesting side note, if you look up tax records in San Francisco, so my daughter went to a private art college in San Francisco, and they have like 28 buildings across the city. The Catholic Church is the biggest landholders in San Francisco. The Academy of Art, where my daughter went to college, is the second. Now I'm wondering if an insurance company is the third.
I would not be surprised if they own, they collect them like trophies. And listen, great investment, right? It's all going up. So New York was going to blow apart in 2008, 2009. Oh, no one's going to New York anymore. And everybody came back to New York. Then at COVID, nobody's going to live in New York anymore. And you know, was buying all the real estate was all the endowments of these large corporate, Columbia, Harvard, Yale, Brown. They were buying all the buildings because they knew people aren't going to leave New York. They're not going to leave. It's, we hear the stories about San Francisco, stories about LA. They don't leave. They may leave, someone else replaces them. There's just too much culture, too much art, too many fun things in those cities that you need to keep them intact. But real insurance companies, I mean, right now the MetLife building is no longer the MetLife building. That's the building in the center of Manhattan that you go down Madison and you go literally through the building and up and around the building. That's one of the nicest pieces of real estate in the world. Because you're just the center of everything. You're building literally in the middle of the road. And they've owned that forever. And if you go look at if you watch baseball, most of the outfield signs are what?
I guess I'll have to pay more attention to the outfield sign.
Insurance companies. Don Hancock forever was in the center field of Boston at the Fenway, forever. Now it's Mass Mutual. They bought them out. They have a bidding right to get there because we were on TV, 82 times a year. And they pay for that signage. They pay a lot of money for it. And that's fine. And if you watch this weekend, we're going to watch golf. There won't be as many commercials during the Masters, but any other golf tournament under normal circumstances, it's all financial services / insurance companies, because that's what they got into, by the way. They got into financial services. And they're just not happy to be life insurance companies anymore. They're everything. In my 401k or my company's 401k, my 401k that we were looking at closely the last couple of days is Transamerica.
Aha. So, just mentioned them. Don't look at your 401k too close because stress is toxic for your brain.
I moved it. We're tying this bait. I moved to cash and a lot of it, not all of it. I moved it to cash because I just wanted to sleep at night, knowing that it was sitting there. And today it was up the entire day, right? The stock market.
Yep.
It's down almost 1,000 points.
Oof. Yeah, this is April 8th for those people who are listening, for when you actually get to hear this live.
Yeah, April the 8th. It's 772. But anyway, the thing is, the best thing about talking to someone like you, who has an audience like you do, is there are going to be people on here that have no idea that their life insurance policy is an asset.
Yeah, I didn't know that until we started talking. I was like, oh. And I wasn't aware, maybe I was told, 16 years ago, 15 years ago, that this 20-year limit was part of the package. I'm sure I didn't pay attention. 20 years or 15 years ago, life was totally different. So
when you say the fact that you still have it and it's been a steady and it's been a very affordable premium that hasn't fluctuated makes me believe it's a term.
I think it is term. I don't want to guarantee that, but yeah, I'm pretty sure the premium has been the same all this time, and that's both of them, and
I
it's
think it was
over $1 million total.
I want to say A.L. Williams was the guy years ago. I was at a an event and he was somebody from his office was speaking. They used to say, buy term, invest the rest. Because when you buy universal life, you were buying the death benefit, the term. You were buying the term, and on top of that was this component that acted as a savings account. Whole life, the same thing, done a little bit differently. And you put in their account, and their account might not be doing as well as putting in the market or buying real estate or whatever else it was. But you're in control of your money either way. But when it's a universal life product, you're really not. You're kind of just putting money into an account that you may be used to pay premiums later, but you're not gonna set the world on fire in terms of an investment return.
Well, I have a business degree. I consider myself knowledgeable. I'm always reading up on new things, and I had no idea. So I figured if I have no idea, pretty sure my listeners have no idea, or the majority of them probably don't. And you're looking for how do I pay for care for mom or care for your spouse? This is at least an option that you can check into, especially if your house is paid for. Ours is not. Ours, we bought our house in 21. So that means, what is that, 51? Jeez.
Well, listen to me. You can use it for that too. I mean, I told you people have sold their $10 million life insurance policies, got like $4 million. So you can pay off some things with $4 million.
Yeah, well, mine's not worth quite that much.
Whatever, I know, but it's your home. You want to keep it, and that's the point of I mentioned earlier about aging in place. You've got this asset which you bought in whatever many years ago. Same with me, and it's worth way more than it is now than it was back then. And I rather than sell that to go give it to a facility that you get nothing in return for, you just use it till you pass away, is almost crazy. So now that's not memory care. Memory care is different. But people when the husband and wife are still alive, rather than looking to go to a retirement home, they can just stay in their own home and keep that equity in that house and then use that and then later on use it. The homes that I'm talking about, the good friend in Maine who talks about this in his speeches, um, is that those homes are now very, very valuable because there's not a lot of them. And people are always looking for them.
Mm-hmm.
So that's the unique thing about it because the walk-in tubs, the all the things you see on TV that make sense, you do that. And then, if you have memory issues later on, then you might have to go somewhere to get a special treatment for that. But rather than just throw it away and then just give the money all to some of these groups. My mom lives in one. She lives in one here called John Knox Village, and it's not cheap, but it's certainly, I mean, it's not expensive, but it's not cheap by any means. And they grilled her up one side down the other just to get in there.
We didn't have that issue with my mom. We had to have a diagnosis of some dementia causing disease. She had to have a TB test. It was pretty easy. I mean, it was right after my dad died, so it wasn't emotionally easy, but it wasn't. It was just like a doctor visit, a phone call or two. It was pretty simple because
Well, my mom's 86, and her mind is like a steel trap. She remembers everything, all of it.
you're like, could you have some of that age-related memory loss, please?
No, she does not even close. It's just like she's knows like she could tell you her balance of her checkbook. She could tell you what's in her savings account. She could tell you what's in her retirement savings, what it costs a month for this, what she spent last year in groceries. It's crazy. But I don't know. Hopefully, knock on wood, we won't have to worry about memory issues with her. But they have that. They have that. You can move from independent living to assisted living to nursing home and then all these different things in between in the same community.
Yeah, that's smart.
Yeah.
There's a senior community in my old hometown that doesn't have memory care, which is the dumbest thing because people have moved in and then they have an issue. Maybe they have a stroke and they get, vascular dementia. And they have to move entirely out of the community in someplace new, which is traumatic enough for those of us that don't have issues, or younger. But when somebody's had an issue, has a health issue, and they're, advanced years, moving's not fun.
Swimming's never fun.
No, we did it 3.5 years ago, and
Did you
well,
ever, did you, we moved 20 some years ago and I was up over Christmas. We were going through some boxes. There are boxes I moved and never opened. And I'm like, finding something like, oh, there that is.
usually if you haven't opened them, it's just don't bother opening them. Just
Well, it's stuff like where I did open.
it in.
I just never forgot about it, but it's just, it's funny. But the reality is, everybody's different. Every one of these deals is different as well. I call them, they're all snowflakes. You're not going to find any two that are the same. You're going to find some that are similar. And like I said, we want to make it so you know what it's worth, and then you decide what you want to do. We're not going to tell you what to do. But generally speaking, in this business, when you get a large sum of money and you're taking the time to get here, then people are pretty fired up when they can move forward.
Well, just knowing that this is an option that you can consider is an awesome first step. Like I said, I wasn't even aware of it, and our insurance brokers are friends. So, it's kind of giving them the side eye over here thinking, did you tell me about this? Or, if I'm sure if I'd asked, they would probably be honest about it, but they might have restrictions because that's how the game's played. So I really appreciate you sharing this knowledge with me because
Well, I'm happy to do it anytime.
you helped me out for sure because now I know what to expect.
Now you have to
5 years.
call me and tell me what your policy is, and I'll tell you what to do with it.
One quick question, since you and I are both in the states with unaffordable homeowners insurance, with the aging population, do you see any changes in what you're doing? Just there'll be just more of it, or is it gonna
There'll
be
be
less?
more of it. I mean, we're kind of like a industry can always say that if people are in financial crunches, we're gonna be busy or not. We're just gonna have a different type of person coming to us, right? So if the economy's bad, you have a different type of person coming to us. When when it's fine, everything's kind of copacetic, you get a different type of person that comes to you. Um, my goal is to educate as many people as possible, right? So and it's not just me, it's just that and the people in my business to try and say, look, we want you just to know this is here. You may never use it, but we want you to have the knowledge. And more importantly, if you know someone, whether it's a friend, a loved one, a colleague, mention it to them if they come to you with an idea of like, what should I do? What should I do? Because people are just looking for money. If you look on TV, you'll see some ads out there to be like, we'll help you do this, structured settlements, sell your annuity, we'll help you deal with lawsuits, we'll do whatever it is. Like lottery winnings, you can sell that lottery winning for cash now and it's not as big. But this is also people looking for cash, and people will never in a million years take you, for example, business school graduate with no idea you could sell your life insurance policy.
Mm-mm.
Somebody told you. But now that we've had this conversation, for the folks that are listening, the word that we said was life settlements. You're going to see commercials now on TV for it that you just blew past and didn't even pay attention to. And they're out there. And that's all to let people know that, one of them even says you're sitting in a gold mine, right? So they're always like, did you know you're sitting in a gold mine? It's true. You are sitting on life insurance. People don't even know it's worth anything. They just let it go. It's for every one that sells their policy, 25 don't. They could have. They just don't do it.
Well, hopefully we've educated people so they know they have that choice and they're not going to be part of that 90% that's just giving money to the insurance companies because who wants to do that? Not me. I'm a gal.
Exactly.
Well, I really appreciate this. For the listeners, Rob's website is in the show notes, so you can take a look at that if you have questions. I'm sure he would be responsive to emails or phone calls, and
I would.
appreciate you reaching out and educating me and all my listeners.
Well, I appreciate you having me, and it was fun. If you ever want me to do it again, I'm ready.
All righty. Thanks so much.
Thank you. Bye bye.